Investment banking products are complex and multifaceted tools used by investors to maximize their return on investments. These products can range from stocks and bonds to derivatives, structured finance, securitization, hedge funds, and private equity funds. Each of these products carries its own level of risk and reward potential. Therefore, understanding each product thoroughly is paramount for a successful investment strategy. This video will provide an overview of the various types of investment banking products available to investors. We will provide an overview of the key features and benefits associated with each product as well as discuss the associated risks and drawbacks. By understanding these products more thoroughly, investors can make informed decisions when building their portfolios. Stocks and bonds are the most common form of investment banking products available to investors today. Stocks represent an ownership stake in a company while bonds represent debt obligations that must be paid back with interest over time. When investing in stocks or bonds, investors can take advantage of different strategies such as buying individual stocks or buying into mutual funds or ETFs that bundle together stocks for diversification purposes. Investors must also be aware of stock splits, dividends, and other related factors when investing in stocks or bonds. Derivatives are another type of investment banking product that allow investors to speculate on future price movements in underlying assets such as stocks, commodities, or currencies without actually owning them outright. Derivatives come in a variety of forms such as futures contracts, options contracts, swaps and forwards among others. Derivative trading is often associated with higher levels of risk than traditional stock or bond investments due to its speculative nature, but also offers potential reward opportunities due to its leverage effect capabilities. Structured finance is another type of investment banking product that involves pooling together multiple types of assets such as mortgages or loans into one package for sale on the secondary market in order to generate additional capital for those entities involved in the transactions such as banks or financial institutions. Structured finance can involve several layers of complexity depending on the terms structured within it, but essentially offers a way for bankers to take large amounts of capital off their balance sheets without completely selling it off, thereby allowing them to keep control over it while still generating returns from it through securitization processes underwritten by investment banks themselves. Hedge funds are another form of investment banking product which involves using pooled money from a group of accredited investors, usually wealthy individuals, who invest their money into alternative investments with high levels risk. But potentially high returns like derivatives or private equity funds among other asset classes in order to generate returns greater than traditional markets might offer them outrightly on their own capital investments through diversification methods employed by hedge fund managers, mostly based upon market momentum identification techniques employed through sophisticated algorithms/models developed exclusively by said managers, taking advantage usually also from short-term price movements, while also trying to protect against possible losses should any unfavorable changes occur within said markets during holding periods. Finally, private equity firms are another form investment banking product which focuses on making long-term investments into companies that lack access to public markets and traditional lending institutions do, mostly because they may not have sufficient track records yet displaying enough stability/growth possibilities either through organic means or through mergers and acquisitions processes, which may require funding from these firms in order to pursue those more ambitious goals otherwise unachievable using traditional methods alone. Private equity firms usually provide both capital necessary for expansion/growth as well technical expertise, board members/advisors, at times needed assisting management teams towards successful exits later down the line once proper returns have been achieved via floating companies publicly offering shares directly onto markets, IPOs, or via mergers and acquisitions processes whereby larger corporations take over smaller ones already deemed viable targets with potential worth compounded by added increased growth rate expectations during holding periods. In conclusion, there are numerous types of investment banking products available today, ranging from basic stock and bond investments all the way up until highly sophisticated private equity deals requiring massive amounts capital embedded within intricate structures needed at times able generating above average returns even under extreme volatility conditions existing nowadays, especially within financial markets, thus making it essential understanding every facet associated when choosing appropriate vehicles best suited towards each individual's particular needs before getting involved at all. Investment banking is an exciting and lucrative career path for those looking to work in the financial industry. Investment bankers are responsible for helping companies and organizations raise capital, as well as providing advice and financial services such as mergers and acquisitions, equity and debt structuring, underwriting securities offerings, and financial restructuring. To pursue a career in investment banking, you must have a strong academic background in finance, accounting, or economics. Additionally, it is important to have excellent analytical skills and the ability to think quickly on your feet. Good communication skills are vital too, since many deals involve extensive negotiations between different parties. A competitive attitude is also an asset in this line of work, since it involves working under tight deadlines with other banks vying for the same deals. The first step to get into investment banking is to secure a 4-year degree from a reputable university with majors in finance or economics. After graduating, you will need to complete an internship program at an investment bank where you can gain experience in the field and develop important contacts with professionals within the industry. It is also important to become familiar with the latest financial news so that you can stay ahead of your peers by understanding changes within the industry quickly. After gaining some experience at an internship program, you can look for entry-level positions at established firms where you will begin as an analyst or associate before moving up further into more senior roles such as vice president or managing director. You should also consider earning professional certification through organizations such as Chartered Financial Analyst, CFA, or Chartered Investment Banking Professional, CIBC. These certifications will help showcase your expertise within the field and signal that you are knowledgeable about best practices within the banking industry. In addition to working hard in your professional life, it's equally important to network with potential employers by attending industry events such as conferences or seminars where you can make valuable contacts which could lead to job opportunities down the road. Lastly, make sure that you keep improving your skill set by taking courses or webinars that focus on specific areas of finance so that you always remain one step ahead of your competition. Investment banking careers offer great long-term rewards but require dedication and hard work from those who wish to pursue them. With these tips in mind, there's nothing stopping anyone from achieving success within this dynamic field. Investment banking is a lucrative field that offers high salaries and great career opportunities. It requires a combination of specialized knowledge and experience, which can be obtained through formal education, on-the-job training, and internships. The median annual salary for those working in investment banking is approximately $74,000. However, the actual salary depends on the specific job role and the size of the firm. For those who are just starting out in investment banking, salaries tend to be lower than average but can still range from $60,000 to $125,000 depending on experience level and responsibility. For experienced professionals with more specialized knowledge and expertise, salaries can reach up to 6 figures or more. In addition to salary, there are also bonus opportunities available depending on performance and company profits. It's important to remember that investment banking isn't for everyone. It requires strong analytical skills as well as an understanding of financial markets. Those interested in pursuing a career in this field should make sure they have the necessary qualifications before applying for positions. It's also helpful to gain some practical experience through internships or other job roles such as research analysts or portfolio managers. In this technical instruction video, we will discuss how you can prepare for a career in investment banking and what you can expect your salary to be when entering the industry. We will start by outlining what qualifications are needed for success in this field and then outline the typical salaries associated with different types of roles within investment banking. We will also discuss how best to gain practical experience while studying or through internships so that you can better understand this field before applying for jobs within it. Finally, we will provide tips on how you can stand out from other candidates when applying for positions in investment banking so that you maximize your chances of being hired into this highly competitive industry. In order to succeed in investment banking, you need strong analytical skills as well as an understanding of financial markets and economics concepts. A bachelor's degree is typically required for most entry-level positions, but if you want to work at a larger firm, then a master's degree may be required too. Another way to demonstrate your expertise is by taking additional qualifications such as the Chartered Financial Analyst, CFA, program or getting certified in financial modeling software such as Bloomberg Professional Services or Excel Advanced Modeling and Analytics, XAML. When starting out, salaries typically range from $60,000 to $125,000 depending on experience level, responsibility, and size of the firm you are working at. However, these figures may increase substantially over time with greater experience or responsibilities taken on within the firm itself or externally through client work. In addition to salary, there are usually bonus opportunities available which depend heavily upon performance and company profits, so it is important that individuals have an understanding of when these may apply before taking any new roles within these firms. Often bonuses amounting between 10 to 50% of basic salary can be expected each year depending upon performance levels achieved throughout this period. In order to gain practical experience while studying, it is beneficial to undertake internship either during summer breaks or part-time while at university. Usually these involve working on real projects alongside other qualified professionals who have been employed full-time within their company, so interns benefit from exposure to this type of environment, which helps them develop their knowledge and understanding further whilst providing invaluable work experience, which is highly sought after by employers once candidates enter into full-time roles after graduating from university. Finally, when applying for positions, it is important that candidates stand out against their competition. Make sure your CV reflects all your qualifications clearly, but also focus strongly upon any relevant practical experiences gained either from internships worked during study periods or later down the line whilst looking for full-time employment. Highlighting any successes gained during them, example, client wins, etc., helps show potential employers your capabilities even further than just academic credentials alone. By following our advice outlined above, individuals should hopefully have all they need set up correctly in order to begin preparing themselves properly for careers within investment banking. Best of luck.